They just made it illegal for you to win. Not officially, not on paper, but effectively. $52,000, that is the price tag they just put on your ability to trade silver. They raised it while you were sleeping. And if you do not understand what just happened, you are about to become exit liquidity for the biggest banks on Wall Street. This is not a drill. This is not exaggeration. This is financial warfare. And you are the target. Right now, as I am recording this video, silver is trading at $115 on your screen. That is the COMEX price, the paper price, the price they want you to see. But here is what they do not want you to know. In Shanghai, physical silver is trading at $132 per ounce. In Tokyo, $140. In Dubai, $130. There's a $15 to $25 gap between what real silver costs around the world and what the paper market says. That is not a market. That is a confession. Raising margins on silver right now is like a casino changing the rules mid-hand because you are winning too much. Except this rigged game controls your retirement. And they just flipped the table. The $52,000 margin hike? That is not risk management. That is a kill switch, designed to protect the banks who are losing billions on the wrong side of this trade. Stay until the end of this video. I am going to show you the exact document that proves this is 1980 all over again. The same playbook that destroyed the Hunt brothers, and I will tell you the one move you can make that their $52,000 trap cannot touch. This information could save you from becoming their next victim. Welcome to the hidden economy. If you want to understand what Wall Street does not want you to see, like, subscribe, and hit that bell if you are ready to learn the truth. Let me start with the document they released. COMEX just announced new margin requirements for silver futures. Effective March 2026, the maintenance margin is $51,977 per contract. That is a 35% margin requirement. Let me put that in perspective. A standard COMEX silver futures contract represents 5,000 ounces of silver. To control that position, you now need to put up almost $52,000 in cash, just to hold the position, not to buy the silver, just to maintain your bet that silver goes up. 3 weeks ago, that margin was $20,000. Then they raised it to $25,000, then $32,500, now $52,000. In less than a month, they have more than doubled the cost of being long silver. Why would they do that? The official answer is volatility management, risk control, protecting the clearinghouse. The real answer? The banks are trapped, and they are changing the rules to escape, and I have proof, fresh proof. From 2 days ago, let me show you the COMEX delivery report from January 26th, 2026. This document just dropped and it confirms everything. January 2026 is now the 6th largest silver delivery month in COMEX history. Let me say that again, the 6th largest ever. And here is the insane part. January is not even a primary delivery month. Primary months are March, May, July, September, December. January is supposed to be quiet. Nobody is supposed to want delivery in January. But traders are demanding physical silver right now. 9,529 contracts delivered so far, with 4 trading days still remaining. Look at the historical data. March 2025 was the largest ever at 16,149 contracts. May 2025 came second at 15,122. September 2025 at 13,640. December 2025 at almost 13,000. January 2026 is already beating July 2025 in a minor month, with days to spare. But here is what should really get your attention. Look at who is issuing delivery notices. JP Morgan Securities. 299 contracts issued in a single day. That is almost 1.5 million ounces of silver they are delivering in one day. Why would JP Morgan suddenly start delivering massive amounts of physical silver? Because they are covering their shorts. They are trapped. And they know what is coming in March. March is a primary delivery month. If January, a minor month, is already 6th largest in history, what do you think March is going to look like? The COMEX is cooked, and the banks know it. This is the same JP Morgan that paid $920 million in 2020 for manipulating precious metals. The largest fine ever. They have been playing this game for decades. In 1980, the Hunt brothers accumulated silver. COMEX changed the rules overnight, and the Hunts lost everything. Same playbook, different decade. But this time, something else is happening that proves the panic is real. Gold just hit an all-time high of $5,279 per ounce. And it happened right after President Trump said, the dollar is doing great. The market heard that and immediately bought gold. That tells you everything about what people really think about the dollar. When the president says the dollar is strong and gold hits record highs the same day, that is the market calling BS. That is smart money running to real assets. Silver follows gold, always has. and silver is still undervalued compared to gold by historical standards. Now let me show you what is happening in physical markets around the world, because this is where the real story is. Let me show you the physical silver prices around the world right now. Shanghai, China, $132 per ounce. Tokyo, Japan, $140 per ounce. Dubai, UAE, $130 per ounce. Kuwait, $120 per ounce. Seoul, Korea, $118 per ounce. COMEX paper price, $115. Do you see what is happening? People who actually want physical silver, real metal they can hold in their hands, are paying up to 25% more than the paper price. They are paying premiums that have never existed before in modern markets. Why would anyone pay $140 for silver in Tokyo when the screen says $115? Because they do not trust the paper anymore. Because they want real metal. Because they know the paper price is a lie. This is what traders call the Great Divorce, the separation of paper prices from physical reality. And it is happening right now. Someone said it perfectly. Silver at $140 in Tokyo and $115 on COMEX is not a market. It is a confession. Now let me show you why this is about to get much worse. You already know about China's export restrictions that started January 1st. 60 to 70% of global refined silver supply, now controlled by 44 state-approved companies. Elon Musk called it not good. He is right. But combine that with what is actually happening at COMEX right now. In the first 2 weeks of January alone, 33.45 million ounces of silver were physically withdrawn from COMEX vaults. That is 26% of registered inventory, gone. In days. Since 2020, COMEX registered inventory has dropped over 70%, from 346 million ounces to under 100 million. The vaults are draining, fast. And the January delivery data I just showed you proves demand is accelerating. Now here is the number that should keep you up at night. According to analyst Faisal Amin, the global paper to physical ratio stands near 356 to 1. Let that sink in. For every 1 ounce of physical silver that actually exists, there are 356 ounces of paper claims. Futures, options, ETFs, derivatives, 356 people who think they own an ounce of silver, but only one of them actually does. The other 355. They own a promise from the same banks who are now scrambling to deliver physical metal before the whole system breaks. What happens when people start demanding delivery? What happens when they realize the silver they thought they owned does not exist? This is called a short squeeze. And we are watching the setup happen in real time. Now let me tell you about the kill switch, because this is how they plan to escape. Mike Maloney, one of the most respected precious metals analysts in the world, calls the margin hikes a classic kill switch. Here's how it works. Step 1. Banks accumulate massive short positions over years. They sell silver they do not have, betting the price will go down. Step 2. Silver starts rising. Their losses mount. They need the price to drop so they can cover their shorts. Step 3. They raise margin requirements. This forces smaller traders to liquidate their long positions. They cannot afford to hold anymore. Step 4. The forced selling crashes the price. Step 5. Banks cover their shorts at lower prices. They escape their losses. Regular traders get wiped out. Step 6. Price recovers. Banks are safe. Regular people lost their money. This is not theory. This is documented. This is how they have operated for decades. And the $52,000 margin? That is step 3 happening right now. But here is what they did not plan for. The physical market is not playing along anymore. See, this strategy works when paper prices control reality, when everyone trusts the COMEX price as the real price of silver. But what happens when Shanghai is trading at 132, while COMEX says 115? What happens when people in Dubai pay $130 for an ounce of silver they can hold? The paper price becomes irrelevant. The physical market takes over, and once that happens, the banks lose control entirely. We are watching the early stages of this right now, the great divorce between paper and physical, the two-tier market that analysts have been predicting for years. Let me give you an analogy. Imagine you run a casino. You have been selling chips that say they are worth $100 each, but you do not actually have enough cash in the vault to back them all. As long as everyone trusts the chips, no problem. Nobody asks for cash. The game continues. But then people start cashing out. They want real money, not chips, and you do not have enough. What do? You raise the price of playing. You make it harder to cash out. You change the rules to slow down the redemptions. That is exactly what the $52,000 margin hike is. It is the house trying to prevent a bank run. But here is the thing about bank runs. Once they start, they accelerate. The more you try to stop them, the more people panic. Now let me show you something even more alarming. Silver lease rates have exploded to 8%. Normally, These rates sit around 0.3 to 0.5%. 8% is insane. What is a lease rate? It is the cost to borrow silver. When institutions need physical silver urgently, they pay to borrow it from others who have it. An 8% lease rate means someone is desperate enough to pay 8% annually just to get their hands on silver. That only happens when there is severe physical shortage. The silver market is also in backwardation. That means the spot price is higher than the futures price. Normally, futures trade higher because of storage costs and time value. When spot is higher than futures, it signals extreme immediate demand. People want silver now, not next month, not next quarter, now. These are technical signals that scream shortage, and they are all flashing red right now. Let me take a breath here and tell you something funny, because this gets intense and we all need a moment. My Uber driver asked me about COMEX margins last week. I'm not joking. This guy picks me up, and within 5 minutes he is asking about silver futures maintenance requirements. I almost crashed my head into the seat in front of me. When Uber drivers are asking about COMEX margin hikes, something has fundamentally changed in the world. Regular people are waking up. They are seeing through the game. And that terrifies the people running the show. All right, back to business. Let me tell you about 3 types of people watching this video. The first type already owns silver. You have been stacking for years. You watched the price go sideways while everything else pumped. And now you're finally profitable. But you're scared. You have seen them smash the price before. You have seen the manipulation. Part of you is waiting for them to take it all away again. The second type is curious. You have heard about silver. You have seen the headlines, but you do not own any. You're trying to figure out if this is real or just another bubble. The third type is skeptical. You think this sounds like conspiracy nonsense. You trust the system. You believe markets are fair. And I respect that skepticism. But I am asking you for 20 more minutes. Look at the data with me. Just the data. Then make up your own mind. To the first type, I say this. Do not let them shake you out. The manipulation is real. But so is the physical shortage. And physical beats paper every single time. Eventually. To the second type, I say this. Do your own research. Verify everything I have said. Look at the COMEX inventory data. Look at the margin hikes. Look at the physical premiums around the world. Then make your own decision. To the third type, I say this. I was skeptical too. Until I saw the data. Until I saw the patterns. Until I saw what happened to people just like you who thought they were safe. Think this cannot happen to you? Think American traders are somehow protected? Let me show you what happened 3 weeks ago in India, because this is your warning. In Rajkot, one of the world's largest silver trading hubs, 44 trading firms declared bankruptcy in a single week. 44 companies. $425 million in losses. Wiped out. Not over months. Over hours. These were not amateurs. These were professional traders with decades of experience. They held silver positions. They were profitable. And then COMEX raised margins. The price crashed. And they did not have enough cash to meet the margin calls. When the House moved the goalposts, they were wiped out in hours. That is not India's problem. That is a preview of what happens when you play the paper game against people who control the rules. Now let me tell you what happens next. Because this situation cannot last forever. There are only 2 possible outcomes. Outcome 1, paper prices rise to meet physical. The manipulation fails. Silver explodes higher. The banks take massive losses. Some may face serious financial stress. And everyone who held physical silver makes generational wealth. Outcome 2, physical markets abandon paper pricing entirely. COMEX becomes irrelevant. A 2-tier market emerges. One price for paper promises, another price for real metal. The world realizes the paper market was a fiction all along. Either way, physical silver wins. Either way, the people holding real metal are protected. The only question is timing. And based on the speed of inventory drawdowns, the physical premiums, the lease rates, and the desperate margin hikes, I do not think we have long to wait. Now, here's something that might surprise you. I do not want the system to fail. I do not want banks to collapse. I do not want chaos. What I want is honest price discovery. What I want is a market where the price on the screen reflects reality. What I want is for regular people to have a fair chance. For decades, the silver market has been manipulated. The price has been suppressed. And regular people who trusted the system got hurt. The $52,000 margin hike is just the latest example. It is designed to protect institutions at the expense of individuals. It is designed to transfer wealth from regular traders to banks who made bad bets. That is not a free market. That is not capitalism. That is a rigged game. And the only way to win a rigged game is to stop playing by their rules. Physical silver does not have margin requirements. Physical silver does not get liquidated when COMEX raises the stakes. Physical silver sits in your safe and does not care what the paper price says. This is why the physical premiums are exploding around the world. This is why people in Tokyo pay $140 for something the screen says is worth 115. They have figured out the game. They have stopped trusting the paper. They want real metal. Now let me give you the data that makes this even more urgent. Silver has been in a supply deficit for 5 consecutive years. Every single year, the world consumes more silver than it mines. The cumulative deficit since 2019 is now over 1.3 billion ounces. Where did that silver come from? Existing inventories. Stockpiles built up over decades, and those stockpiles are now running out. The Silver Institute projects the 2025 deficit will be the deepest on record, nearly 300 million ounces. That is almost the entire annual production of Mexico, the world's largest silver producer. And unlike gold, silver gets consumed. It goes into solar panels, electric vehicles, smartphones, medical devices, and 1,000 other applications. It does not sit in a vault. It disappears into the global economy and never comes back. Every solar panel needs about 20 grams of silver. Every electric vehicle needs 1 to 2 ounces. Every smartphone has silver in it. Every data center, every AI chip, every piece of modern technology. Silver is not just a precious metal. It is an industrial necessity, and we are running out of easily accessible supply. This is not fear-mongering. This is mathematics. Supply minus demand equals deficit. Deficit times years equals depleted inventory. Depleted inventory plus China export ban equals crisis. But I will tell you what I am personally doing. I'm not selling any physical silver. I'm holding through the volatility. On big dips, I'm adding small amounts, money I can afford to lose, money that can sit for years if needed. I am not trading futures. I am not playing the paper game. I'm holding metal. Real metal that does not have counterparty risk. Real metal that does not get liquidated when they raise margins to $52,000. That is my strategy. Yours should fit your circumstances. Now let me give you the other side, because I would not be honest if I did not. Could silver crash from here? Yes. In 1980, after hitting $50, silver crashed 90%. It took over 40 years to recover. That happened. It could happen again. Could the manipulation continue working? Yes. They have more tools, more tricks, more ways to change the rules. Never underestimate the desperation of institutions fighting for survival. Could I be completely wrong? Yes. I have been wrong before. I will be wrong again. Markets are unpredictable. Anyone who tells you otherwise is selling something. This is why you never invest money you cannot afford to lose. This is why you diversify. This is why you make your own decisions based on your own research. But here is what I know for certain. The $52,000 margin hike is not normal. The 70% inventory drawdown is not normal. The $25 physical premiums around the world are not normal. The 8% lease rates are not normal. The China export ban is not normal. Something is breaking in the silver market. The old rules are failing. And when systems break, wealth transfers from those who do not see it coming to those who do. The question is, which side of that transfer you want to be on? Now, before I give you my predictions, there is one more thing I need to show you. This is the part most people miss completely, and it could be the difference between getting trapped and building wealth. Let me explain why this $52,000 margin is mathematically designed to eliminate you from the game. A standard COMEX silver contract is 5,000 ounces. At $115 per ounce, that contract controls $575,000 worth of silver. With a $52,000 margin requirement, you need almost 10% of the total value in cash just to hold the position. That is insane leverage restriction. Compare this to stocks. Most brokers let you trade stocks with 50% margin. Some futures contracts have 2 to 3% margins. But silver? They want 10%. And they raised it there in less than a month. Why? Because at lower margins, regular people can participate. They can hold positions. They can ride the bull market higher. At $52,000, regular people are priced out. Only institutions and wealthy individuals can play. This is financial gatekeeping disguised as risk management. And here is the really clever part. They are not just raising the dollar amount. They change the entire system. As of January 13th, COMEX moved to percentage-based margins instead of fixed dollar amounts. Silver is now at 9% of contract value. What does that mean? Every time silver goes up, the margin requirement goes up automatically. You need more cash just to hold the same position. In a bull market, this is brutal for long positions. The higher silver goes, the more cash you need. Many traders cannot keep up. They get liquidated, and their forced selling pushes prices back down. This is the definition of a rigged game. The rules automatically work against anyone betting on higher prices. But here is what they did not think about. Physical silver does not play by these rules. When you own physical silver, you do not have margin requirements. You do not get liquidation notices. You do not need to post more cash as prices rise. You just own metal, real metal, in your possession. This is why the smart money around the world is abandoning paper and going physical. This is why premiums in Shanghai and Tokyo and Dubai are exploding. They have figured out that the paper market is rigged against them. So they are exiting the paper market entirely. Now let me show you something fascinating about what is happening in the futures market right now. Normally, when traders hold futures contracts, they roll forward. They close their current contract and open a new one further in the future. They maintain exposure without taking delivery. This is how the paper game works. Nobody actually wants the silver. They just want the price exposure. But something strange is happening. Traders are rolling backward. They are moving from March contracts to January and February contracts. They are accelerating their delivery timelines. Why would anyone do that? Because they want the metal. Now, not later. Now, they do not trust that the metal will be there in March. They want to lock in delivery as soon as possible. This is a massive red flag for COMEX. If everyone starts demanding delivery at once, the exchange breaks. They do not have enough silver to fulfill all the contracts. Remember that 356 to 1 ratio, 356 paper ounces for every 1 physical ounce. If even a small percentage of those paper holders demand delivery, COMEX cannot deliver. They have to settle in cash. And when that happens, everyone realizes the paper price is fiction. That is called force majeure. It is when an exchange admits it cannot fulfill its obligations. And it has happened before in other commodity markets. We are watching the conditions for this develop in real time. Now let me give you my timeline, because I know you want specifics, and I am not going to hedge. This is what I believe is coming. Not hope, not speculation. This is where the data points, January and February. Extreme volatility, more margin hikes possible. Scary headlines, mainstream media calling it a bubble. This is the shakeout phase. Weak hands exit, strong hands accumulate. If you panic, sell here, you are doing exactly what they want. March through May. Supply constraints become undeniable. Physical premiums persist or expand. Silver tests 120 to 130 on COMEX. Mining stocks start to move. This is when mainstream media starts changing their tune. June through September. If physical keeps draining at current rates, we could see delivery stress at COMEX. Potential for cash settlement events. Price discovery starts shifting to physical markets. This is when the great divorce becomes permanent. End of year. My target is $175 to $200 silver, possibly higher if there is a dollar crisis or major geopolitical event. And based on what I am seeing, I think that target might be conservative. Could I be wrong? Always possible. Markets surprise everyone eventually, but the setup has never been this clear. The data has never been this compelling, and the desperation has never been this obvious. Let me leave you with one final thought. Throughout history, every paper money system has eventually failed. Every attempt to suppress the price of gold and silver has eventually collapsed. Every manipulation scheme has an expiration date. The question is never if. The question is when. I believe we are approaching that when. The divergence between paper and physical is too large. The inventory drawdowns are too fast. The desperation moves are too obvious. The $52,000 margin is not strength. It is panic. It is an institution fighting for survival. It is the last move of a player who knows they are losing. And when that player finally loses, the wealth transfer will be historic, from paper to physical, from Wall Street to Main Street, from those who manipulated to those who accumulated. Make sure you are on the right side of that transfer. Screenshot this video, save it, come back in 6 months, come back in a year. Let us see together how this plays out. 5 years from now, January 2026 will be remembered. The month silver crossed $115. The month they raised margins to $52,000. The month the great divorce between paper and physical became undeniable, and you will either be grateful you saw it coming, or you will wish you had. The trap has been set. $52,000. That is the price of playing their game. But here is the secret. You do not have to play their game. You can hold physical. You can step outside this rigged system entirely. You can own real metal that no margin hike can take away. That is not financial advice. That is just observation. What you do with it is up to you. Drop your thoughts in the comments if this opened your eyes. Send this to one person who needs to see it. One person who has no idea what is happening right now. Remember those numbers. 140 in Tokyo, 132 in Shanghai, 130 in Dubai, and 115 on your screen. That gap is the truth. They cannot hide anymore. You may join our channel. I give most important updates if you are a silver or gold holder. Subscribe for more truth. The hidden economy. Because the real story is never on the surface. I will see you in the next one. Stay awake. Stay physical. And whatever you do, do not let them shake you out.